All right. Hello and welcome to another edition of Market Analysis. I normally do these Sunday and sometimes Wednesday, but with the Federal Reserve making its rate decision tomorrow, which for some reason I thought it was going to be Thursday, at least last week. That's what I was thinking. I knew it was going to be this week. I just didn't really pay attention to which day. For some reason, I thought it was Thursday because it's very often on Thursday. At least I think it is. I tend to forget which day of the week it falls on. So, all right, let's just jump right into it. I'm definitely not going to do any weekly charts today. I'll save those for the weekend. The week isn't closed. We're just going to talk about the specifics. Nothing is really going on right now other than gold. Well, gold's actually a little bit lower. This isn't updating it quite yet. But let's talk about some of the economics. So the street is predicting that there's 100% certainty of a rate increase. However, the big moves in the market are as a result of the general consensus, at least that's how I'm seeing it and how I'm hearing it, is that they're going to remain dovish. So even though the rate will be raised, the expectation is that the rate will not be raised a lot. And the other expectation is they're going to still talk like the market isn't doing all that well. But in general, the Fed has a really big problem. The interest rates on government bonds are already starting to go up significantly, which is going to cause huge problems, which I've already talked about on this show. And I'm sure you're seeing it on the news already. People will be refinancing less. The price of housing will probably go up. Well, not the price of housing, but the price of your mortgage will go up. So it will feel like the price of housing is going up unless the sellers of houses are willing to drop the price, which is actually what I think is going to happen to some extent. It's also going to depend on how much foreign capital is coming in to buy real estate. And then that goes down a completely different rabbit hole in that Miami and New York have already removed, they're KYCing all buyers, especially cash buyers, and there is more scrutiny on that. So if the government starts to really scrutinize foreign money coming in and buying real estate, then that is going to significantly drop some real estate prices. But anyway, we're going on a different path now. So the expectation is a lot of certainty the rate will be raised, and the Fed, I really hope they learned their lesson after the 2000 crash, the dot-com crash, and Greenspan was blamed for raising the interest rate too late and raising the interest rate too slow. He was raising it at 0.25%, like every meeting or every other meeting for like 2 or 3 years. And he got it all the way up to like 5.25% or something like that. And then we hit the 2008 recession, and then the rate was dropped to 0, and it's stayed at 0 for an insanely long period of time. And now all the talk out of Wall Street is that they're going to very slowly raise the rate because they still don't believe that the markets have recovered yet. The S&P is at an all-time high. We hit a new all-time high today, S&P and the Dow. The Dow is just a smidge under 20,000. And just keep in mind, just because the S&P is at a new all-time high, each of these dots do represent a new all-time high alongside with a 100% bullish bias on investment managers, and the market generally kept going for, in most cases, for a while. But there have been pullbacks. They weren't they were significant if you have a leveraged position, but they weren't significant in the grand scheme of things. So just because it's overbought doesn't mean much. But here's the chart I really wanted to talk about, and I really wish I warned you guys about this chart on Sunday. I do apologize. I knew about this, and yet I'm still an idiot that haven't really been taking advantage of it. I recently found out about this like early this year, though some knew about it for a while. So this is since 1994, and this is the black line is the performance of the S&P on the day before a rate announcement, the day of the rate announcement, and the day after the rate announcement. And this black line in dark green is the S&P 500 on all other days that are not on the rate announcement. So basically, almost all of the gains in the S&P 500 have been made because of the Fed. That's one way to look at it. Of course, that's not necessarily true, but these days have been exceptionally well. And this is not a secret because basically, I think over here on the last statistics that I saw is the 20-year average move in the S&P 500 the day before the rate increase is like 0.25%, and the average move of the S&P 500 the day of the rate increase is like 0.35% over the last 20 years, more than 20 years. So you put those together and you have a 0.5% average up move of the S&P 500 during that 48-hour period, or during those two trading days. And this actually breaks it down how the market moves during that day. So the average for a day like today over a 20-year period was 0.24%. And today the market's moved over 1%, I believe, across the board. I didn't actually check the percentages, but it was around 1% across the board. And you may not be surprised that it was the Fed itself that published all this information. So this is a Fed paper from 2011, and the black line is the S&P 500, and these are some of the other markets. And of course, other markets close at different times, like DAX is in Europe, the CAC is France, so that's also in Europe. So that's why those lines don't go all the way to the end of the day. And this is the 2 p.m. time of the Fed call, and the market usually drops, and then the market quickly recovers. So is this going to happen tomorrow? I don't know, but this is the 20-year historical average of that move. And if you're interested, I'm sure you can find this paper online. I'm assuming it is available somewhere. So this is the Federal Reserve Bank of New York staff report on the pre-FOMC announcement drift. Something to take a look. So what's going on in general with the markets, because things are getting out of control. So this is interesting. So other than this spike in 2014, we have a 3-year period where the calls are pretty expensive. So this is demand for calls. So this is the bulls. People are buying call options on the S&P 500, and this is the puts. So the puts are very, very cheap, and the calls are pretty expensive. Here is, and here's one more chart. This is one particular sector. This is the NASDAQ Bank Index, and this is just absolute insanity. It's up pretty much 25%, and that's just unreal. And it's never been this far above the 150-day moving average. So things might retract to the mean a little bit. Okay, let's talk about the markets. Nope. Where am I here? Here we go. Okay, so this is our chart of the S&P 500. By the way, I will be migrating everything over to the TradingView charts. I'm also going to be charting more things on TradingView and probably publishing them. Actually, been playing around with creating proprietary indicators. So that's going to be interesting. I might throw one on there in a minute. It's kind of what I've been doing half my day today while watching the market go through the roof. So these were our arrows from last time. I guess, wow, this arrow really should have been a little steeper. I don't know how long I'm going to keep these arrows on here because there's kind of sort of eventually will get in the way, but I will always keep them there from one video to the next. So anyone viewing this can see when I was right, when I was wrong. This isn't really to prove that I'm right. I'm actually not as great of a trader as people might think I am. I will be honest. I'll tell you when some trades are good, some trades are bad, and the things that I actually trade, I'm not planning to talk about them on a live channel. So that doesn't really make a difference. I'll occasionally will take a position of the things that I talk about, though it might be better if I don't, because if I take a position in something that I talk about, I always feel like internal bias, and I will, I'll talk about hope over reality of the situation. So here's the reality of the situation. Last week, we had this candle here. And to me, this did not look like a reversal candle by any means because it closed at the top, which is why I was looking for a higher high this week. And that was pretty much the only reason, because other than that, the market is seriously overbought, guys. We are once again a new high in the RSI. Now, the good news is that we have confirmation. My momentum indicators, and I know these are basic. It's the RSI 14 and it's the MACD. This is like the really basic, simple stuff. But a lot of people look at them and they pay attention to them, so I pay attention to them. And so this is confirmation. So this tells me that this is we're nowhere near all-time highs. So even if we get a pullback, things will happen. So I am going to be moving these arrows. So I think the market doesn't have all that much life in it left. It's possible that we had our intraday high. So what I'm looking for, and tomorrow is supposed to be a good day, but also the S&P 500 might have, went up way too much today. And even if we do have a new high tomorrow, I want to see a reversal candle. This isn't exactly a shooting star. I would really like to see a shooting star. Let me draw another arrow here. Perfect. So we'll be looking for one of these situations and hopefully to pull back to the 50-day. And we may or may not make a new low here. It really depends on where the 50-day will be and how we fall. So that's all I really have to say on the S&P 500. I do believe that a top is very nearby. And if I throw on some of the things I've been working, yeah, that might be a little annoying. And again, I'm going to do something I maybe shouldn't do and zoom in. There's a 13 right here, which is a bearish signal. Those that are watching and know what I'm pointing to, you will understand. And those that don't might need to do a little research on it, but this is more advanced. These are some proprietary indicators that I had to manually kind of create, and I probably didn't even program it perfectly correctly, so it's a little bit different. And that's a 7. So there's 2 more days for something called a 9-13-9 sell signal. and it's a pretty damn good sell signal. So we could go down from here, but this is definitely getting toppy, in my opinion. Here's the Dow Jones, which has been even more bullish than the S&P 500. I mean, the RSI is really out of control. So there's nothing else to say here other than my notes would be the same. If I throw my similar indicator on here, again, this one is slightly lagging behind the S&P. I do have a 13, which is my sell signal, and that's a 6 up there. So we got a couple of more days before that 9-13 combo. Gold. Let's talk about gold. So what happens? Oh, here's what I forgot to talk about. So what's to expect tomorrow from the Fed? So my expectation is, and I believe the street's expectation is, though I really haven't checked. I don't normally watch TV all day. I kind of just like glance at the markets and I keep an eye on my positions. I don't like to listen to the talking heads at all. I pay attention to, I Google for certain things, which is why I have those charts that I show you guys on the macro stuff. But I don't pay attention to like anyone talking and guessing, because their guess is as good as mine. And my guess is that she would raise it 25%. Sorry, 0.25%. And if she raises less than that, which is very, very unlikely, but right now, like I said, my expectation is that she raises it 25% and then talks about we will be very, very cautious raising it even more. And okay, but if she raises it 0.5%, there's going to be some havoc, because that is more than what's expected. So if she raises it 0.5%, there could be a shock to the markets where equities drop, and equities would basically drop. Now with gold, it's going to be interesting, because gold can still go either way. So to me, gold's been overdue for a bounce. It's been overdue for a bounce. Now, if equities drop, then people might run to the safety of gold, and gold can go up. So again, like on the S&P with my arrows, I was looking at a short in the S&P here, and it was a little premature, so I was early. I don't think I was wrong, but I was early. But it's possible that this pullback will not even come as low as this. So in which case, then I would be wrong. I will be early and wrong a little bit. So on gold, I think we've been, again, just like the S&P, I think we're way overdue for a bounce. So I am going to move these arrows, and I am looking for my bounce. Though even after I get the bounce, I don't really expect much. I do have an overall bearish view on gold. And let me see if my new creation. Okay, so this looks like there is a little more downside, according to this indicator. So we got a few more numbers to go, and now we're forming a new sell signal from the top. Expand that a little bit. So there you go. Okay, so it's definitely possible that we can go down. Not sure why these are yellow. That wasn't the color I meant to use. So yeah, so maybe I should do this. But again, with the Fed meeting, who knows? But I am expecting, we gotta have like a dead cat bounce here. Things don't crash forever. Just the markets don't really work like that. All right, and finally, oh no, wait, I have the dollar as well. Here's oil. So these arrows And these arrows have been fairly right. That's a reversal candle to me, right? That's a nice big wick. And let's do some fundamentals on oil. Let's see which one first. This guy. All right, so oil did form a head and shoulders pattern, which indicates it can go up. And how far can it go up? Well, the target is this fat part, which is close to 25 bucks. So if we go up from 50, we can go all the way to 75 and meet the target, which I think is a lot. But basically, like all the governments right now, in my opinion, are kind of colluding to prevent countries from selling as much oil as they want. They're trying to convince them to sell less oil, to raise the price of oil, which is bad if you're a human and you pay for things, but it's good if you're the government and you got a tax and you earn a percentage from basically from like sales tax, right? So if the price of gasoline is $3 a gallon, the government makes way more in tax revenue as a percentage of that than if the gas was half that at $1.50. However, Russia has in the past never really been very cooperative, cutting the production of oil after they were convinced to cut the production of oil. I guess they cooperated here for about 2 months, and then it was back to then they cooperated again, and that didn't do anything, right? So Putin and his country might do what they like, and if you're afraid the world's running out of oil, stop. Got plenty of oil. All right, let's close this, and here's another chart. So even though like I said, everyone is colluding to raise the price of oil, and things are getting a little overheated here. So what do we got here? So this is the VIX on the oil. So this is the volatility of oil as measured through the option prices. And this is the price of oil. So as the price of oil hits a new high in a year and a half, the volatility goes down. So we're at extremes. And it's possible that these things will reverse a little bit. So even though I am personally still bullish on oil for a little while, these big wicks are giving me pause. And with tomorrow's rate decision, anything can happen. I still think there is more life in oil left. I can definitely see it going up to like 58 and then dropping back down to maybe test the $50 mark or 50-51 area, and then go up from there. And I'm still thinking higher oil prices are coming. As for potential sells, let's see what we got here. You really have to know how to read this thing, so that's why I'm kind of doing it for people. Yeah, there's not much here. So it's not really helping you all that much. And yeah, well, actually, there was a sell signal here, but I wouldn't really use this because the sell signal is from all the way over here. So, and it would have been negated. And again, this is a product of me still learning how to program in TradingView. So there you go. All right. And finally, we have the US dollar. And this one is still stuck under our Fibonacci. And like I said, this Fibonacci is fairly critical. I don't think it would hold. I think this Fibonacci will be broken, and then we go all the way to 120. But before we break it, we might need to pull back to the 50-day moving average, or maybe just stay here for a bit. And I did check my indicator, not really my indicator, but the proprietary indicator on this. It'll take a little while to render it. And so this 9 is a bit of a sell signal, which it's like a double-edged sword. It's a sell signal, but it's also a high probability of a follow-through And but it's definitely something to pay attention to. There tends to be like several days of lower prices, and then if we break above it, then expect an extended follow through. If we don't break above it and the prices start to get lower and lower, then the follow through is not coming, and then it sets off a nice long downtrend. So it's very interesting that we got this sell signal right at the Fibonacci. So I am going to be slightly bearish the dollar, but the dollar is going to go nuts tomorrow along with other foreign currency. But there's a pretty high expectation of a 20. I mean, here's the expectation, right? 25%, 0.25% raise in the rates, and dovish statements that they're still scared the economy is weak. If you hear anything other than that, then the markets could be surprised. The Fed is in a bit of trouble because they're damned if they do and they're damned if they don't. If they don't start raising rates, the stock market is going to get out of control. So they're going to have to start raising rates pretty heavily because even, and this is why the pundits on TV are always wrong. They're always screaming how a rise in rates is bad for the stock market. Meanwhile, well, I already closed the chart. You know that the rate is going to be rising for the next year at every meeting, yet the stock markets are like going to the moon. This is why you don't listen to the people on TV. Rising rates are good for markets because they're kind of meaningless. I mean, you'll borrow money and you'll put it in the stock market and you'll earn more money. Meanwhile, if you raise rates, you're only raising rates to catch up with the bonds. The bonds already started raising their rates organically because no one wants to buy these bonds. So the rate is going up on the bonds to entice people to buy these bonds. People are still not buying these bonds. They're still selling them. So the interest rate keeps going up. If you're going to sell bonds, where are you going to put your money? Let me tell you what they're not doing with it, these money managers and these pension funds and anyone else that holds these bonds. When they sell these bonds and are causing, or they're not buying the bonds, they're selling the bonds, kind of like almost the same thing. When they're doing this, they have money now. What they're not doing is they're not buying gold. This money is going to go into the stock market unless there is a better instrument for them, which I guess is Bitcoin. Oh, Bitcoin. Totally forgot about Bitcoin. Funny how I forget about Bitcoin. All right, which chart we got to pull up? I guess let's do this one. Forget which one it is. All right, this is my shorter. All right, so we're above the Fibonacci line, so that's good. We're stuck right at this previous high. And like I said before, I mean, I do have some reservations. The volume is down, but it's Bitfinex, so no one trades there anymore. I mean, momentum is definitely going down. We'll have a new high in the price, and divergence. These things are trending down. So momentum is pointing to the downside, but there's open air here all the way to like 1200, right? So I wouldn't be surprised if the thing just pops to 1200, and then I'm gonna be talking exactly the same thing of this high versus the previous high. So Bitcoin is definitely getting ready to pop, and then it will have a correction. Let's hope the correction keeps us above 1,000 when the correction comes. I am now forced to go bullish Bitcoin across all time frames, even though I really don't like the divergence and the fall in these indicators. Let me just open up one more chart and then I'm done. This would be, I'm not going to do the weekly. You guys have seen it last time. Let's do the other Bitfinex. I don't really have a good Bitcoin index to use until Brave New Coin gets their index to comply with TradingView again. I'm kind of stuck using a single exchange. Yeah, so you can name your shape. I mean, it's not really a cup and handle, and it's not really a triangle, but it's like in between a cup and handle and a triangle. Maybe someone wants to create a brand new indicator and give it a name, and or a brand new geometrical shape and give it a name. But yeah, but cup and handles don't always work out. Like I thought this was a nice cup and handle that would take us to here, and then this happens. This is the summer of 2015. So this is Mike Hearn and Gavin Andreessen doing. So this was Bitcoin Classic, I think, or Bitcoin XT. I get them all confused. But yeah. All right, guys. On that note, this is good. I only took 30 minutes this time. I'm getting better. Maybe one day I'll get them to 20. All right. I guess I got a minute for a question or two if people want to type them in. Give you guys a minute. Otherwise, good luck with your trading tomorrow. For the rate call, I will be watching it. That's like the only time I ever turn on the TV, is during the Fed speaking engagements. Will Bitcoin go to 5,000? I believe that Bitcoin will go to 5,000. When? Well, I wrote an article almost 2 years ago now, definitely a year and a half ago, where I called two specific dates that are going to be very, very critical. I wrote this article in August of 2015, I guess. Now, yeah, in August of 2015. Was it? What year are we in? 16? Man, it might have been 14. Wow. I really wrote it that long ago. Should probably pull it up. Article. Hold on. This is very doable. This is why I have a blog, by the way. Go to publications. Oh, I can answer another question. Yeah, the technical indicators are still valid, like the MACD and the RSI. They're valid. You might want to adjust your time frame. The standard numbers may not fit because Bitcoin moves so much, but they're valid. I mean, some things aren't valid because it's a 24/7 market, and so some things like there's no gaps in the Bitcoin price, and there's things like that. Okay, so there was an article called Intro to Time. Intro to Time Part 1. Yeah, wow, 2014 I wrote this article. See, this is why I hope Cointelegraph doesn't like go away or go down, because I would hate to lose these. So in this article, and at the time, Bitcoin was over $500. So Bitcoin was still over $500, and it was actually going up, sitting on a trend line that it hasn't broken yet. So, and I wrote this article about time and time predictions regardless of price. And I had two specific dates. One date corresponding to June 16th, 2015. I know the 16th isn't there, but if you do the math. All right, come on, Cointelegraph. What are you doing? Why did the screen just go dark? Great. Well, that's annoying. Let's try this again. This is why you prepare ahead of time. Anyway, this corresponds to June 16th, I believe, 2015. And so this was more than a year in advance from the publication of this article. And at the time, I did not know if this was going to be a low in Bitcoin or a high in Bitcoin. Now, when this date came, before this date came, like 6 months after this article was written and 6 months before this date, to me, it became obvious that this was going to be a low in the market. And that day corresponded to the Greek crisis right here. There it is, 6:15, 6:16, almost to the day. So around here, I started saying that, okay, so now that we've broken that upward trend line, we're going down. So I expected the low to come on this day, but I clearly expected the low to be lower than the previous low. And obviously, I was very wrong about that. But this was my day for something significant happening in Bitcoin. And yeah, this article was written, wow, 2.5 years ago now. And my next critical day in Bitcoin is going to come 2017.62, which is August. And I forgot what day this corresponds to. So whatever 0.62 over here is, I believe it's like August 17 or August 18, something like that. I'll have to do the math again. But and if this is my low, then I expected this to be my high, and it's going to be something significant. And I've been waiting for Bitcoin to like shoot up to create some kind of a major event in August of 2017. So that is now 8 months away. So in that 8 months, can Bitcoin double or maybe triple in price? It's possible. I would like to see that because I would like this price to be high enough above the previous high so that when it crashes, it kind of still stays up above 1,000. So is it possible that we go to 5,000 by this day? Probably not. Is 3,000 possible? It's possible, unlikely, but possible. 2,000 is more realistic. Correct. This is I used Martin Armstrong's time analysis and pi cycles to come up with this timeline for Bitcoin. All right. On that note, I will call it a day. And good luck, guys. Good luck tomorrow. Big day in trading.